hope that you had a wonderful weekend. My name is Eric Hagan.
And I'm Greg Petrie.
Just a quick reminder before we get started that tomorrow we have our monthly retirement income lunch and learn. We'll be talking about inflation and the rising cost of healthcare and steps that you can take to protect your retirement future. We are expecting a full house, so I don't know if there's any tickets left. If you are interested and have not signed up, please do go to the website and see if there's a ticket or two available for you, but I know that we are expecting a very full house tomorrow. Also, a quick note, next month, the first Tuesday of May, we have a very important topic lined up, and we're going to be talking about the 7 keys to optimizing your Social Security benefits. So please go to the website and grab some tickets if that's of interest to you.
That being said, here's what's happening this week and a little bit of what happened last week. Consumer spending increased by 0.8% in February, even with fuel prices soaring, the top 0.6% gain projected by economists polled by Reuters. February's inflation-adjusted gain was about 0.5%, the largest in 6 months. January's headline, personal spending gain was doubled to 0.4% in a Commerce Department revision.
The final March University of Michigan Consumer Sentiment Survey hints that morale may be rising on Main Street. It came in at 76.2, which is well above the 74.3 consensus of economists polled by Briefing.com. However, on the other hand, the March Consumer Confidence Poll from the Conference Board fell to 70.2 from February's 71.6 mark, which is in line with the expectations of those economists.
Freddie Mac's March 29th survey found the average interest rate for a 30-year fixed-rate home loan at 3.99%. Rates on a 15-year fixed-rate mortgage averaged 3.23%. A sour note, the S&P Case-Shiller Home Price Index fell 3.8% in January to a low unseen since the end of 2002.
Durable goods orders were up over 2% for February. This reverses some of the 3.6% retreat from January. However, economists polled by Briefing.com had expected an almost 3% gain for the month.
And in the markets, the best first quarter for stocks in 14 years ended with yet another solid week. The Dow up 1% to 13,212, the S&P up 0.81% to 1408, and the NASDAQ up about 0.75% to 3091. Look at these first quarter performances. NASDAQ up 18.67%, the Dow up 8.14%, and the S&P 500 up 12%. Gold futures climbed $9.50 for the week, settling Friday at $16.71. Gold gained 6.71% for the first quarter. NYMEX crude fell $3.85 last week, but still ended March at $103 a barrel with a 4.24 quarterly gain.
Now, with all these gains, it might be time to talk about how to protect these gains and lock them in. If you have any questions on how to do this, please go to www.adaptmyportfolio.com. Here's what we're looking at this week. The March Institute for Supply Management Manufacturing Index and February construction spending data arrived today on Monday.
Tomorrow presents Commerce Department's reports on February factory orders and March vehicle sales, along with the March 13th FOMC minutes.
Then on Wednesday, the March edition of the Institute for Supply Management Service Sector Index is out, plus first quarter earnings from Monsanto and Bed Bath & Beyond.
Thursday brings earnings from CarMax and the latest initial claims numbers.
And then wrapping up the week, we have Good Friday. U.S. financial markets will be closed and banks will be open. Also, the March unemployment figures will be released. That's what we're looking at this week. My name is Eric Hagan.
And I'm Greg Petrie.
We'll keep our finger on the pulse of the economy and report back to you next Monday.
So please be sure to subscribe, and we'll talk with you then.
And also, from both Greg and I, we wish you a very happy Easter.